Well, we've made it to that 19,700 print, and it's not been all that bad. After many days of consolidation, we'll finally manage to defy all the weak global cues coming in, and led by blue chips like L&T, HDFC Bank finally has begun to participate in the recovery, and ICICI Bank as well has been gaining now for fifth straight session. In fact, it's been the longest gaining streak we've had in about 8 weeks, while FIIs continue to sell, touch wood.
You know, Aisha, while everybody's been talking about the gain and the rise and the frenzy in mid and small cap stocks, everybody's also missed the point on the Nifty, which is that this is the longest winning streak in last 8 weeks for 5 days on the trot now. It's been a straight line move. You've gone past the key hurdle mark on the Nifty, and it's largely because a fresh move has started in some of the global denominated stocks, and short covering I think is there. Let's look at where we stand in terms of the global averages. FI selling, yes, but that is not having impact on the market momentum. And now the outperformance I think is getting more and more real and more pronounced. In this mumbo jumbo of what's happening to interest rates and commodity prices are moving up, China is down, Indonesia is down, Philippines is flat, and Thailand has given negative returns, but India is right up there. So I think if you're a bull, you need to look at not just small and mid cap stocks now. Nifty and the Sensex, they are also getting ready. What we've seen now is a fresh built up in Nifty and bout of short covering in banks. I think banks have no problems. So post short covering in banks, is the bank Nifty now getting ready for fresh longs?
And I think it's important to also note that the FI selling quantum has been 9,000 crores in just the last 4 trading sessions, and we've managed to scale it all the way to that 19,700 mark.
I mean, that's such a valid point, that 9,000 crores is about $1 billion.
Yeah.
$1 billion getting out in just a jiffy, and markets are just standing tall, and Nifty is actually moving higher. Thank you DIs, thank you SIP investors. That's what you would say, because markets are no longer a one-trick pony. I used to remember that every morning before we would get up, we would not look at the NASDAQ or the crude, we would look at the FI number. It used to be this one-trick pony that, okay, FIs are buying, markets are going higher, FIs are selling, markets are going lower. The only difference, Aisha, this time around is that there are a lot of block deals which are happening. There are a lot of PE deals which are happening. There are a lot of rotation which is actually happening within the market, and also a lot of IPOs are going around the corner. So that also is having impact in the way of the equilibrium of the market is moving. But FI selling is not breaking the back of the market. India is outperforming, and I'll repeat what I said. Everybody was looking at the change in the mid. Everybody's over-examining railway, defense, shipping stocks, but the real move in the Nifty in last couple of days has been mighty impressive.
Oh, well, yes, and that flows coming in from the retail, which we want to thank through the SIP, etc., is something which is actually supporting the DI moves, and that's flowing into the mid cap and the small cap arena, and that is where the bulk of the rally has actually panned out already. Yes, last week we have seen a bit of momentum come back in large caps, but if you look at the mid cap and the small cap space, those are the ones which have been outperforming quite massively, both sitting at record high levels, and the data should come up for you on the screen as to the fact that this has not always been the case. Yes, in short amount of time we might see a bit of outperformance and spurt come in when it comes to the small cap space, but if you look at the long term averages, there's no big coherence to that matter. In fact, if you look at the 5-year data, the small cap index has actually returned a negative number versus Nifty as well as mid cap index, which has managed to do well. In fact, if you look at the 3-year 5-year view, Nikunj, it looks like that Nifty 50 has pretty much done at least in line or better than the broader markets.
See, again, the challenge with data is that you can read it the way it suits you. Yeah. What is important here is that if you look at the long-term average, which is what is important, I think the mid and the small cap stocks have not really done anything exceptional. If you map the maths plus minus a couple of percentage points here and there, it is not like a wild outperformance which is happening. Now you look at a very myopic kind of a view, which is YTD or 6-month change, when the real rally in the Nifty and when mid and small cap stocks have started, I guess the number will look very bloated. Now what really matters right now is that how far are you away from the historical averages in terms of the PE multiples, and where are the historical averages. On an historical average, if you look at the mid and the small cap stocks, they are not cheap, but they are not wildly expensive. Bout of volatility in mid and small cap stocks after the recent run-up cannot be ruled out, because you can make out that now the hand-on-heart trader, the folks who are coming in just for like a they're not investors and they pretty much are momentum buyers. That action has started. But is there case for a sharpish reversal? Is there case for an absolute end of the road kind of a scenario for mid and small cap stocks? No, sir. All I'm saying is the historical averages, we are trading in and around the historical averages, which means the future return will get compromised, and some kind of mid-air turbulence in mid and small cap stocks cannot be ruled out, because there are a lot of pockets where it is just getting slightly stretched, the frenzy and perhaps the price action. But no ways the bull market in the mid and small cap stocks is over. We must also recognize the construct of the economy. The construct of the economy is that so many businesses are blooming, so many new sectors are getting added. I mean, defense looked like a small sector, but today it's become a major sector. Railways, who would have thought that railway will occupy center stage? Solar has become a big sector. Manufacturing has become a big sector. So that's the nature of the economy which is evolving. I mean, all NBFC stocks 15 years ago, they were small. All retail stocks 25 years ago, they were small. All IT companies 25 years ago, they were small. But the nature of the economy has developed in such a manner that new and new sectors are getting added. And that is what I think markets are endorsing. See, the real world will change later. The market assumptions, it changes right now. But why are we having this longest chat here? Because looking at the data and looking at the valuations, they are not cheap, but I don't think they are bubble.
Yeah. Okay, that's the take on the broader markets, and I guess India's business is only going to grow with the G20 summit kicking in. And just to put statistics here, the business of G20 and what it really could mean for India's economy, while of course most dignitaries are set to come in today onwards, and actually they have since last night also. We're talking about 2/3 of the world population, the countries representing G20 this time around, and that's 82% of trade in commercial services, 75% of global merchandise trade, and 85% of the global GDP, which is going to descend in New Delhi.
See, for next couple of days, we would be occupying the center stage in terms of all the global, global headlines. Whether it is the Western press or whether it is Asian, Eastern and Western. G20 in a sense is important. Why? Because it just gives you a different kind of a pedestal positioning. It is a clear indication as to how India has emerged right up there in terms of setting up the tone and the tonality of the global agenda. And the message from G20 this time is very simple. Vasudev Kutumbakam, which is one earth, one family. And it clearly means that this time around the agenda setting would be centered around climate change, women development, empowerment and channelization of sectors and countries which need financing. This also means that in the near term, the entire focus of the developed nations could be centered around climate control. It could be centered around the fact that what really needs to be the big agenda in terms of restoring the supply chain. So it's a real change in terms of positioning for India. It's a victory in terms of how India has now a pedestal standing in terms of being an opinion maker, and how essentially the global powers and all the action now for next couple of days would be centered in India. So I think in terms of a market specific thing, you may not get anything. But in terms of a, like you say, that market price is a function of PE and EPS. So I think this is a PE re-rating moment for India and Indian markets. So if you're thinking that why Indian markets are outperforming, well, these are small facts which add together and it leads to this kind of an PE multiple and opinion re-rating.